Welcome back to Golden Rule Radio. The volatility in the metals market. We had a little bit in the last couple days, the last 48 hours here.
It's a new kind of volatility. Downward.
I kind of like it.
I do too.
Yeah, it was due for something like this. We've talked about it on the show. We also talked from last year about how gold was going to run when we were in the 1200s. Now we're in the 1900s, pushed above 2000. So where do you guys want to start the show with gold today?
I want to talk about some of the listener comments because, one, we really appreciate the banter back and forth. And you guys, so many of you are making excellent points. A lot of discussion last week and a few critical comments just about us even mentioning the possibility of a pullback. And look, we're going to do that. We can't always just be perma-bulls. We did get that pullback. It is healthy. And personally, I'm not going to speak for you guys, but I felt like the market was a little tired, showing signs of being overbought. We talked last week on the show about how far we had separated from the moving averages. And Miles, you caught some flack for putting up some charts that showed a potential wedge formation. And I want to put that back up here because this is a really good reset here for us to look at and say, look, this is what could happen. This is from last week's show, and this sideways channel of maybe bouncing here between the $1,925 and $2,000, right, would be completely normal and healthy. So we're not going to be perma-bulls. All that to be said, I also encourage you to listen every week. It sounds like there's some frustration out there that there's some things we don't talk about or cover, but we have in the previous week. So go back and listen to previous shows. We can't have each show be a replay of the previous one and cover everything like a broken record. Play for a few weeks and, again, keep the comments up.
Yeah, Tori, I think that's reasonable. We talked about two different things last week. We talked about, from a charting perspective, the reality of RSI and MACD and just pricing movements and the fact that you have to have these blow-off periods, these profit-taking periods. But then we also looked at those multi-year charts where we went back and we looked at previous bull markets to come to the conclusion that you don't have to have these pullbacks. You should. Generally, in healthy markets, you'll allow for this blow-off period where the market can get its feet back underneath it, but realistically, you don't have to have them. And when you do, in a aggressive bull market, they're not going to be very deep. They tend to lean more on the shallow side. So with that being said, I'm looking at a massive drop yesterday, over $100 in gold. $4 plus in silver. Big percentage drops yesterday. And we're coming into some low end like 382 on the medium term fib levels, some 50% lines on the short term fib levels. And here we are today, probably going to finish the day out Wednesday with a nothing candle. I'm sitting here while you're talking, looking at the gold chart still bouncing up and down. And gold's probably going to close the day out exactly where it started, even though we had quite a bit of volatility up and down throughout the day. So we could see a continuation here. We'll have to see what tomorrow, Thursday, ends up looking like, both in gold and silver. If we see some more downwards momentum, just understand this started at like 1,400. Went from 1,400 to 2,000. A drop down into the 1,600s is still very bullish. A drop down into the high 18, low 1900s like we got yesterday, that's not even a drop. That doesn't even count.
Yeah, that 5.6% drop in gold yesterday was the most since 2013, and I'm smiling because Miles remembers that day very well.
Yeah, you guys were all on vacation. I was covering the whole office by myself.
Just about, yeah, and he was just running around with his head cut off. But yesterday, one, there's profit taking, right? But these stop losses, the more you hit sort of these downward support levels and they break, the more trades you start to get. It creates this snowball effect. What's different this time from previous huge drop days, if you will, or down days, is the fact that we didn't see a bunch of ounces dumped in a matter of 2 minutes. This was sort of this progressive ball rolling down the hill kind of effect yesterday, and that was actually very encouraging to me. It didn't appear to be a price manipulation, really. Well, silver down about 15%, and then both of them stopped, and they started to rebound at the open of the Asian market yesterday. That also was bullish for me. And so you're right, volatility today, relatively unchanged, however, but we're still off of the lows that we put in yesterday. And I'm laughing too because I'm sure it makes, at least in the short term, it makes your charting much easier for you, because when you're at an all-time high, you were saying from here it's so much hard to predict. At least now you've got some good numbers to work with.
Right. Once you start to see the volatility, you can start to write the story of what you think is going to end up happening. So I'm glad you brought up the stop loss thing, because I think it's a pretty strong theory as to what did happen this week. Because we're looking at gold up, 45% in the last 13 months. For Pete's sake, silver made a 100% run since March, if you count the
125, yeah.
Right, count that post-COVID fall. So this is where you start to differentiate from fundamentalists who own gold for what we would argue are the right reasons, and traders who are in this market like any market for the reason of following bull markets, following bear markets. Doesn't matter what market it is or which direction it's going, there's always going to be a category of investors in those markets who are looking for the buy and sell point. So if you've got somebody who comes into the market last year, they're up 45% on their gold position, you're darn right they're moving their stop losses up. So I think there's some legitimacy to that argument as well. I don't recall seeing anything in the news in the last couple of days that would cause something like this from like a plunge protection team in the US dollar or major money getting funneled into the equities market. The equities market is up, but only barely, and it's just scraping past those old highs from earlier this year and nowhere near the all-time highs from back in January, February. So sometimes traders just, it's their day, and they had a day. And ultimately, all that trading does, and I've said this 100 times on this show over the last 3 years, all that news does, all that politics does, it just speeds up or slows down how fast the trend is already going. News doesn't turn a trend the other direction. Markets are going to do what they're going to do, and you can make them go faster, you can make them go slower, and this is just a speed bump.
Yeah, I think that's a good point with trading versus fundamental buying, because traders are obviously going to take profits from time to time, and I think that's a lot of what you saw with the gold price is some profit taking in the trading world, because today, Wednesday, we saw buying come back into the market. There was no follow through to the downside with gold. It had this one big down day, silver as well, and there wasn't a lot of follow through today, Wednesday, to push that market a lot lower. If you did see follow through, then you could say, okay, the major trend might be starting to change, but that one day event is just kind of a one-off trading profit taking where you didn't see follow through. So I don't think anything's really changed here. It's just giving you a better entry price. Maybe we see a little bit better entry prices, maybe not, but it's definitely not changed the course of the direct trend up with gold.
No, and I think you'd see the other markets moving in opposing directions if this was a fundamental move. I mean, where's the dollar? Exactly where it was a week ago. Where's the Dow? Barely above where it was a week ago.
Well, and you wouldn't have so much buying. I think we can all attest to the fact that this has been looked upon as a great gift, an offer on a dip. Just like we said last week, we're in a mode of buying the dips. And the astute investor has been doing exactly that, right? Buying dips here. And it's not just in the futures market. We're talking about the tangible commodity ramping up too. And I love the volatility as well, because the other gift that we got was in the ratio. We'd come all the way down to 69-1 on the gold-silver ratio.
Now we're back at 75.
Yes. Beautiful, right? It just screams buy silver again. So that performance hopefully will continue. And fundamentally, you're right, nothing's changed. We talked last week, we went through a whole list of possible bearish impacts to the precious metals prices. One was a dollar rally. We got a dollar bounce, right? And so expect the prices to come down a little bit. Two was a COVID vaccine. Well, guess what? Russia came out, and that's one of the theories, is that this news release of the first COVID vaccine coming out of Russia was a cause for the drop. And then we have improving COVID numbers for the first time in a long time. So all three of those were things that we mentioned last week. They were, 3 of maybe 8. There's other possible bearish impacts out there that you need to be prepared for, and that's why we argue the case.
Right, but all three of those things should have had more impact on the Dow and on the dollar if this was a fundamental move.
Yes.
So that's why I'm thinking this is specific. And again, I love that you brought up the idea of the stop loss. I think this is specifically a precious metals taking a breather.
Yeah, and part of the issue too is the metals are being driven more by the economic indicators, right? The debt and the spending and some of those things. It's not going to be strictly the COVID piece. Far more impact from things that are ultimately long-term very weakening to the U.S. dollar.
Right. And I do just want to toss this out real quick. I think one of the big reasons we're talking about this today is because everybody here in this room has been through a few of these type of massive volatility markets over the last 15, 20 years. So we're encouraging a lot of our listeners to make sure when you have markets that are running like this, and the reason we're talking about this stuff is you have to not let your emotions dictate your financial decisions, especially when you're having this type of market run, up and down. You have to look at it objectively, and you have to look at it in terms of other markets. So please understand, we're not trying to defend the fall in gold over the last day. In fact, quite the opposite. I've been hoping for a pullback for 2 months. I mean, you've got to try to look at this from the 10,000-foot view and see how this particular market interacts with all the other ones. And we're not seeing that interaction this week, which makes me think this isn't political, it's not a manipulated move, or you would see something on the other side of it somewhere. And you're not getting that in the U.S. equities, and you're not getting it in the dollar.
Well, let's jump into the charts with gold. Before we do that, I want to point out, if we were to take the gold label off of the gold chart, if we just had the chart.
Yeah, you'd think it was Bitcoin.
And you didn't know that it was gold. And if you did the same with silver and you didn't know it was silver, a pullback in a move like what we're having here with gold, the trends are clearly bullish. If you just had this chart of any market and you have a pullback like this is a long-term buying opportunity on any pullback. Silver and gold, now you throw the label up there and it kind of stirs the emotions a little bit because, we're talking about the metals market. But if you were to take the metals market label off these charts are telling you that this is a long-term buying opportunity.
And we may have come into that first opportunity because you look at where the fibs are on both the gold and the silver chart, and we've come into those first entry point levels. For anybody who has some money looking to get in, this may be where you take a bite out of that. Frankly, the way the day closes today, so by the time this shows up tomorrow, we'll know how this market's starting to turn. But you look at especially today's Wednesday candle on the gold chart, like I mentioned here a minute ago, we've had a lot of up and a lot of down, and it looks like we're going to close the day right where we started it, or very, very close to.
Just on gold. Silver actually has had a little
Silver's
bit of a pop,
had a good
so,
up day,
yeah.
yeah.
We'll
But silver had a
70
lot
cents.
more down percentage-wise yesterday.
Yep.
So the next couple days are going to be very telling. We're looking for a breakout up or down of today's candle. So that's what I'm looking for right now. I'm looking for the price to move above and close above the wick, the top-end wick on today's candle, or vice versa on the downside before I'm going to say we're done with this little drop, or if this is going to be a real quick turnaround. The other thing, we could see this just kind of linger for a week or two, which means silver is going to just kind of bounce up and down and form another sideways pennant pattern. My argument is reversals happen quickly. So Thursday, Friday this week, we should see up. And if we don't have up by Thursday or Friday, or maybe a double bottom with a turnaround at that point, the longer this goes sideways, the more likely we are to jump back down, maybe move down to the next fib level down. And that wouldn't surprise me either. I mean, we're going to have some debates apparently coming up at some point, and we're going to have an election, hopefully in November. And
we are?
Yeah, well, supposedly, that's the rumor. Or at least that's what we've done every other 4 years in the past. So we'll see if it happens again this year. So we should have some political reasons why people are going to take their eyes off the markets. Plus, we're supposed to be sending our kids back to school, which I think also isn't going to happen. So there's a lot of reasons why things tend to calm down around August. And Robert, I know we've talked about this through the years. There are some seasonal expectations on how markets moved based on what's going on in the world around them and who's paying attention to what. I know 2020 is a very different year, so maybe this August is going to look very different, but then we get into the political elections, and internationally we've got the Indian wedding season and a number of other things that are going to end up pulling that gold price up as we move into mid to late fall. So wouldn't surprise me to see it linger here, maybe one more little dip down, but when the reversal happens, it will be pretty quick. You'd expect to see us putting in newer highs shortly after.
Well, let's mention platinum and the way it's behaved here, just because it did have a little data point above 1,000, which is starting to kind of look a little bit like what silver did before it broke out. Platinum did pull back with the other metals, not as severely, but it looks like platinum's holding up pretty well here. And so we still like platinum, especially because it's half the price of gold. So if you like the idea of buying gold at half price, buy platinum. Also like platinum versus palladium. Still very lopsided when you look at it versus palladium and the historical chart there. With Platinum being a lot of an industrial metal, the industrials have actually picked up here, Dow Industrials, Dow Transports. So maybe we are seeing a little more bright spot in the economy. I mean, I hope so. We need some good news out there.
No, we really do. And that's something that, you grab onto a little bit of hope wherever you can find it in this day and age. But the economy is showing signs of ramping up a little bit. And with the transports up 8.3% in a week, I mean, we saw a low of 10,200 last week on the Dow Transports and the high of 11,068. So they're pricing in something. We use that often to be bearish and likewise bullish on gold. Well, that could play into Miles' sideways movement theory there a little bit if we get some positive economic numbers. We won't hear anything from the Federal Reserve because they don't have an FOMC meeting until September 15th, so don't expect anything there. But dollar-wise, I will point out the fact that Morgan Stanley came out and said that they're feeling like the dollar is the most oversold that it's been in 40 years, and they exited their short position. And that's kind of powerful to me. Or is it an indicator of maybe a little further dollar strength in the short term? Again, these are all reasons that the metals could pause here for a little bit, but I will tell you this, get ready for the velocity of money picking up because it's already started happening. So that goes hand in hand. You print trillions of dollars. If the velocity of money isn't there, it doesn't have the impact from an inflationary standpoint that it should. Well, when it starts to is when money starts to exchange hands. Right now you're seeing house buying ramp up unbelievably, right? You've got a car bubble going on. You've got an RV bubble going on. You've got a home improvement, massive spike in spending, and bikes up 5,300%. So people are spending money now, and this is when you need to get ready for inflation to pick up, and this is also when silver starts to really resume its climb.
That's it for Golden Rule Radio this week. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvany Financial, visit our website, McIlvany.com, or give us a call, 800-525-9556. Thanks for listening. Have a great week.